What matters most is the breakout valid? Is the breakout the valid breakout? Now, quickly, I'll share my screen so we can just start the class. We're talking about support and resistance. Support and resistance. Support and resistance. Can you all see my screen, please? If you can, reply me on the chat box. Yes or no? All right, if you can see my screen, no problem. So very quickly, support and resistance. Now, our questions. Remember, the class is not for me teaching. The class is for me to answer your questions based on support and resistance. So I will start picking the questions. You can talk your questions or you speak or you type them rather. So who will go first?
Listen.
All right, can you hear you, engineer?
Listen.
I can hear you.
Yes, I read a book.
Okay.
I have an ebook on support and resistance.
Okay.
On some strategies. So among the strategy is support and resistance. And that book was telling me that when we use support and resistance, we don't need to wait for any retests. At the moment it breaks out of the support at a key level area. That we should follow the trend to take the trade. YouTube, some of the tutors mentioned that we wait for a retest. So I'm confused. But in the book, they said you only wait for a retest on trend line, that you don't need a retest on support and resistance.
All right,
so which quickly, one do I take?
Very quickly, engineer. Let's go to Euro USD. Or let's use Euro HUD. Yeah. Let's use Euro HUD instead.
Okay.
Let's use Euro HUD instead. Now, engineer.
Yes, sir.
This is an example of a breakout, right? Yeah. And the breakout occur here, right?
Yes, sir.
This is where we have the breakout.
Yes.
Where my green this thing is. This is where we have the breakout, right?
Yes, sir.
Good. Now, if you look at this particular place also, we have a breakout here. And we have a retest here.
Yes.
There's a breakout here.
Yes.
And that green area is the retest.
Yes.
Now, let me answer your question. The both of them are correct. Do you know why?
Why, sir?
They are both correct because if you backtest the both of them over a longer period of time,
Yes. Yes, sir. Yes.
You will notice that they work. Every time it happens, they work, right?
Yeah.
But the question you want to ask yourself, like I said, is the breakout a valid breakout?
Breakout. Okay.
Is the breakout a valid breakout? If the breakout is not valid, then the retest will not work out. The breakout will not function. You get?
Yes.
If the breakout is not valid, the retest will not happen. And the breakout will not happen. But instead, what you get is a fake out and no retest. In this scenario right now, this was a breakout, right? This place.
Yes.
Price breakout from this place and went higher, right?
Yes.
Now, some people will tell you that, baby pips traders, they will tell you that, okay, since we have this is what price is going to do. Price is going to come back here, it's going to retest, then it's going to go up. This is what I will tell you, right?
Exactly.
Or they will come here and draw a trend line like this. Then they will tell you we have a pure trend line breakout.
Yes, sir.
They will draw a trend line. They tell you we have a pure trend line breakout.
Exactly.
Then we should buy, right?
Yes,
Yes.
yes.
And their target to be here.
Yes.
But something
That's
happened.
true. Yes.
Something happened. What happened? Price did not break out. Instead, price did something like this.
Yes.
Right?
And continue.
Can you see?
Ranging.
Good.
Yes.
Now, although this is a pure breakout, yeah. This zone is a pure breakout. Can you see?
Yes.
But the problem is there are some breakout that after the breakout occur, they retrace heavily or they retrace 50%.
Okay.
And those breakouts are they are the breakouts that confirm a retracement. You get me?
Yes, sir.
Yes.
When we get to understanding retracement psychology, I will give you people a detailed video on an ebook where you'll be able to see the four style of retracement. I'll do a video and I'll do an ebook. Okay. So you'll be able to see the four style of retracement. It is always those four style. Retracement will come in that four style. So when we have a breakout that confirm a retracement, price will always go back, or it will retrace 50% or 78% or even 100%. Sometimes it will go above 100%.
Okay.
Do you get what I'm saying?
Yes.
Now, but what happened here? The retest did happen. Price went up, but it drops, right?
Yes.
It drops.
Yes.
Now, they will tell you another one. Okay, they will say, okay, this is another trend line. They will draw another trend line like this. Then they will not make this one long. Do something like this. Let me not. They will not put another trend line here, rather. They will do something like this. Yes. And they'll tell you we have a breakout, right?
You see that one is already invalidated.
Yeah, they will say we have a breakout like this.
Yeah.
Yes,
right?
yes.
Then they will tell you, come back to retest, right?
That's what they say.
They will tell you it is going to retest here.
Yes.
Then you buy.
Yes, that's what they say.
Then you buy, right?
Yes.
They are correct.
Yes.
But the problem is they don't know the face of the market.
Yes.
They don't know the face of the market at all. They don't know the face.
Okay.
The face in the sense that is in our scheme. What level is the market currently trading at? What level is the market currently? Is it a retracement trade? Is it a reversal trade and every other thing? So they don't know. So engineer, to answer your question, they are both correct. But the problem is the breakout
Okay,
a
sir.
valid breakout? Now, I've been using trend line. I don't
Okay,
want to
sir.
use trend line. Let me use
Mm.
Mr. Femi. I saw your questions. I'll do justice to them after this. I don't want to use trend line. Let me just use horizontal line instead. So you'll be able
Okay.
to see clearly what I mean by
As for support and resistance.
so I'll be able to answer your question very well. All right, this level. If you agree with me, this is a support zone,
Yes.
right?
Yes.
It got rejected here. Sorry, a resistance zone. It got rejected here.
The resistance.
It got rejected
Support is
here,
in-
right? It got
Yes.
rejected here, right?
Yes.
Now, this is where price
Good.
break out from the resistance, right?
Yes. That's the breakout.
Yes.
Yes.
Good. Now, on the normal, they will tell you that it's going to retrace back to this place. Then it will go up, let's say, to hit this first target. Are you getting it?
Yes.
Yes.
Yes, sir.
Yes.
This is what they will tell you, right?
Yes.
But instead, what did the market do? The market did something like this and dropped.
Yes.
Can you see? Now,
Yes, sir.
if you happen to enter immediately price breakout, you will be in loss,
No trouble.
right?
Yes.
If you happen to
Yes.
enter with when the market retest, you will be in loss at the end of the time.
Yes. Yes.
With this scenario, right? So that's why I told you that what really matters is the breakout valid?
Breakout.
If the breakout is valid, then the two scenarios you mentioned, if anyone happens, you are good to go.
Okay, sir.
But if the breakout isn't valid,
Okay.
you are going to get loss.
Okay.
You get? Now, I think engineer, I've given you a good example, right? Can you hear me, engineer? I've given you a good example. All right. Let me take your question, Mr. Femi. You said,
Thank you so much.
how does multiple time frame analysis relate to drawing our support and resistance in relation to the method you are teaching us? We've not gotten to multiple time frame analysis, but we answer this. How does multiple time frame analysis relate to drawing our support and resistance in relation to the method you are teaching us? All right. Now let's go to the USD index. Mr. Femi, are you there?
Yes.
All right.
Yes, I am.
Let's go to the USD index. This is the USD index, right? Now one of us, we did an analysis based on this USD index yesterday night. Or sorry, during the weekend, like a weekend analysis. I told him and we should discuss analysis, how to analyze. And as at that time, what is today? Today is Wednesday, right?
Yes.
Price was around there. So we have Monday, Wednesday, Tuesday, Monday. Good. Now this was the area where price was, this particular bar, that bullish bar. Can you see?
Yeah.
I can't see the screen, sir.
Can you see my screen now, engineer?
I can't see the screen.
I can see the screen. Oh.
I can't see the
It's
screen,
from
sir.
your network. I
Okay,
can see
good.
the
Thank you.
screen.
Is it back?
Yes, sir.
All right, now
I can see it now.
pay attention. I don't want to skip any other. At this junction, if you ask me any question, I won't skip it. I won't tell you wait for the next class. Are you getting it? But if it's way too advanced, I won't answer it. But if it's normal, I will answer. But let me answer this one now because we'll get there. I don't want to complicate things when we get to that level. Now, this, when I told him, let's discuss the USD index, price was at this level on Monday, on Sunday rather. Are you seeing it? That bullish candle. Are we there?
Yep.
Good.
Yes.
Yes, we are.
Good. Now, and I told him that price is going to drop down to this level. I did not take the pictures of the chart, but I'm sure if it does, I'm very sure it does. But I told him price is going to come down to this level. We analyzed this. And now, Mr. Femi, to answer your question, are you hearing me? Hello, Mr. Femi, are you there?
I'm
Actually,
with
what time frame is this, sir?
This is the daily time frame. You can see the chart now.
Okay.
Good. Now,
Okay.
now, Mr. Femi, your question, let me go back to your question. How does multiple time frame analysis relate to drawing our support and resistance in relation to the method you are teaching us? I will take your question from the bottom. In relation to the method you are teaching us. Now, the relation is this, Mr. Femi. Price will always respect the lower time frame levels before it gets to the higher time frame levels. Are you getting it?
yes.
Now, before
Okay,
a child
awesome.
will grow up to be an adult, the child is going to pass through baby steps, right?
Yes, so
It's going to be a toddler. It's going to learn how to crawl. It's going to learn how to stand. It's going to learn how to walk. It's going to learn how to feed, right?
Yep.
Now, all those things are the support and resistance level of the lower time frame. You get? Like I said,
okay.
they are the building blocks. The lower time frame are the building blocks to the higher time frame price level. Do you understand?
Okay.
Yes.
So when you analyze your charts and the market is giving us a bullish Can you hear me?
Come again. Come again.
I said
Voice went off.
when you analyze your charts,
Yeah.
and the market is giving you a bullish time frame signal from the monthly
Okay.
and a bearish time frame signal from the daily.
Yes, sir.
Yeah.
What is going to happen is this: price is going to respect the daily time frame before getting to the monthly time frame. You get?
Yes, sir. In that case, what do we do? Do we wait for the daily, the daily to align with the monthly?
It depends on your choice. For me, I might choose to take the daily trade. It's a long trade, a swing trade. It's a good one. Or I might decide to wait for the daily and join to the monthly target.
Okay. If it's going to be daily, then we're going to trade it within a day. Or we go on.
Yeah, good. Now,
what do I call it?
now listen to this. The daily time frame retracement.
Okay. Yes, sir. Yes,
we
sir.
always take 5 to 8 days. 5 days minimum, and 8 days.
For a daily time.
A daily time frame retracement.
For a daily retracement. That's serious.
Can you hear me?
You mean before it gets to the EMA?
Yeah, before it touches the EMA.
That's serious.
It's going to take 5 days or 8 days. In short, after the 8 days, the price can continue the trend. Now, sometimes it might extend to 14, 20, whatever days. Eh?
Okay.
The
Yeah.
reason why it is extending, it's because the market is trying to do it is currently overlapping between two time frame zones.
Okay.
Someone jot this thing down and ask me this question. Ask me this question when we are discussing about time frame.
All right, sir.
Now, let's go back. Can you see my chart now? Let's go back to the chart.
Okay, sir.
I want us to count the days of retracement that happen. We'll be counting the retracement days. Now, from the first bearish candle, this is the first bar, right?
Yes.
2, 3, 4, 5, 6, 7, 8. Can you see after the 8th bar, price went up? Do you see?
Yeah.
The second one here, let's see. 1, 2, 3, 4, 5. After the 5th bar, price drops. Can you see?
Yeah.
Now let's look for another one. Let's look for another one. I need a trending market retracement. Something. Now let's look at this. Let's look at this. 1, 2, 3, 4, 5, 6, 7, 8. At the 8th bar, the market dropped. Then it did another what? 1, 2, 3, 4, 5, 6. Like 14 days, and it drops, right?
Yeah.
Good. Now let's continue. Let's look for more. Let's look for more. After this, and I will go back to answering Mr. Pemi's question. Now look at this retracement. One. Okay, our meeting will end in 10 minutes. Then I'll send you another link to join again. Okay.
Okay.
All right. Now we have 1, 2, 3, 4, 5, 6, 7, 8. Can you see after the 8th bar, it pushed up, came down again, then pushed up finally. Are you seeing this?
Sir?
Yeah.
Good. So I'm going to give you an assignment based on this. You can go and research on your own. Then you come back and tell me what you find. Now, Mr. Femi, back to your question.
Okay, sir.
Okay.
Let me copy your question. You can copy it. Let me copy it and drop. Now, back to your question. The monthly gave us a signal. Same with the what? With the daily. Now,
Okay.
we are to respect the daily time frame signal first before we now go to respect the monthly. The monthly, I'm expecting USD to come to this top. Are you getting it? But what I want is this. I want it to do something like this. It must give me this retracement. It might decide to go back up from this place. But in our group, I said something on WhatsApp. I said, I'm going to send a particular reason why a roadmap on USD index. Now, this is the key area, the POI I talked about, Mr. Femi. Engineer, this is the POI. I need a close,
Okay.
I need a close above this place at the end of the month. At the end of the day, I need a close above this level. At the end of the day. It can be Tuesday.
POI.
Yeah, that level is my POI.
Point
of interest.
Point of interest.
Yes.
Okay.
I'm coming.
Okay.
Who's that? Who? I don't get how come and give it to you. Hello? All right, sorry.
Yeah, go on.
Yes, sir.
Sorry. Now, this is my POI, my point of interest, the area of interest where I want price to break through at the end of the day. Now, it might be Thursday, it might be Friday, it might be Wednesday, but as long as that area is still intact, USD will continue to be weak. Do you get?
But this is 1 hour's time frame, sir.
Yeah, this is 1 hour time frame. I love that question. It is because of what? Based on what? Multiple time frame analysis. Now, why is it 1
Time
hour?
frame analysis.
Why is it 1 hour? For us to have a daily trend,
Yes, sir.
there must be a
1 hour is the
1
primary.
hour break of market structure.
Okay.
For
Then the 1 hour
us,
will be primary then. Why
for us,
daily is our
for us to have a daily trend,
trend? Okay.
there must be a 1 hour
1 hour.
break of market
Of
structure.
market structure.
Are you getting it?
Okay. Yes, sir.
The same thing, for us to have a 4 hour trend, there must be what? There must be a
There must be a 30 minutes break.
good. There must be a what? A 30 minutes
30 minutes
break
of market structure.
of market structure. Are you getting it?
Yes, sir.
Good.
When you say trend, coach, do you mean an impulse move?
Yeah, I mean an impulse move.
Okay.
Now, so what I want from here is this: unless price breaks this level up like this,
Yeah.
USD is
Yes.
not ready to be bullish. It must break this level up. Do you get? Before it will go up. Do you understand?
Sir.
Now we might have something like
Yes,
this.
sir.
If it does something like this, are you seeing it?
Yes.
If USD did something like this, then drop, then it must break this level now. It's no longer the other level. It will now be this new level.
Okay.
It will no longer be this level. What am I doing here? I'm simply following what? Market structure.
Market structure. Yes.
Can you see?
Yes.
I'm simply following market structure. Now, quickly, we have 4 minutes before I move to the next system. Now, let's take an example of what I just finished saying. Let me take an example of what I just finished saying. Now, look at this particular place. Look at this retracement.
Yeah.
Yes, sir.
This wave that price did up. I want us to work.
Yeah.
I want to do a typical example of what I just finished saying. Let's go to the 1 hour.
Okay.
This is a daily time frame, right?
Yes.
We'll go to the 1 hour. Now, this is the 1 hour. And this is our line. Now, we'll follow market structure. Now, listen and watch very well and also listen. Now, when price drops, this was the market structure level, right? For those of you that understand market structure, this was the market structure level, right?
Yes.
Yeah.
Now, it drops again up. This is now the new market structure level. Yeah, right?
Yes. Yes.
Yeah.
Now, it drops down here.
Down.
It drops down here and gave us a new market structure level here, right? This is not the new market structure level, this place. Yeah. Are you seeing it? And I stretch the rectangle. So we have a break of market structure, right?
Yeah.
At the end of the day. Now let's go back to the daily time frame and see. Can you see that there is no breakout there? It is only wick that is in that place. I need a good answer from everybody. We have 2 minutes more.
Yeah.
Do you see that?
Yeah.
Do you see that there is no break of candle? It is only the wick.
Yes.
So this is not a valid breakout. We need a breakout that will come with a good body. Do you get? Now, what happened there again? So that means this level still hold as what? Market structure level, right? Now, what happened? We now have a new breakout from here, a new low that gives us this market structure level. Yeah. This market structure level. Now, let's go to the daily. And let me click on Now, have you seen where we have a close above the rectangular line on daily? Now, when we have that close, what happened? Let's go to the 1 hour.
Impulse.
There's an impulse move, right? There's an impulse move. And where is the move? This was the move. Do you see the move now?
Yeah.
The move gave us this stop, right? Now, very quickly, we have another what? Break of market structure here. There's a break of market structure here. Now, let's go to the daily and confirm it. Daily. Good. There is no close below it. This is where we now have the what? The break of market structure. This zone. Yeah. Yeah. This was the real break of market structure. The market gave us a type A. Market gave us a type A retracement. And did what? Drop. Now, as it drops, it follows what? Market structure. Now, this is what I want you to see. I will send you another link, then we'll continue the class. Mr. Femi, your questions. Now, Mr. Femi, I don't know if I've answered the first one.
If you come again, it's
Alright.
in between.
Yeah, it's in between. I know.
It's better, sir, because network took me out.
Please, David, there's somebody who's at the waiting room. Just allow the person in.
Coach, preferably, sir, if there is a actual real life case study you could show us, which you used in your own consideration of analysis.
A real life case study. That's why I'm using USD index.
Okay.
Because
Okay.
it happens just this week.
Okay.
That's why I'm trying to use the USD index.
So
Victor,
I can hear you.
I made you the host now. I no longer have the power
Okay.
to let you in.
Okay, no problem, no problem. Where is this thing itself? I'm coming. All right, let me just continue.
So coach, sorry, 1 second.
Okay.
So with your typical analysis, can you just draw how you would, would you start drawing your support and resistance? Would it be from the daily or from the 1 hour? And just run us through that.
It will not be from the daily. What will happen is this weekend I will do a video. You could see how I analyze.
Beautiful. Thank you.
I'll do a video. You will see how I analyze. Not because from here now, if I'm to analyze from here now,
Yeah.
it won't take me 3 minutes. I'm already done with my analysis. What am I doing with?
Okay.
This is what I want to see. Price must break below here, break above here for me to do what? For it to go up. Why? Because it is already resting on my moving average level, support level. Can you see?
Yeah.
So what I need here is a break above this place, this 1 hour level. If we can have the break, then I know automatically price is going back to this top. Do you get?
Okay.
Now I'm done with my analysis.
And if it doesn't break,
we didn't even start. We did not even start the analysis. And you are done.
That's what I'm saying.
if it doesn't break, what happens?
If it doesn't break, I will continue the sell side.
I decide to go low.
Good.
If it decide to go low.
Good. If you decide to go low, there's no problem. What will I do is I will come back to my daily time frame and look for my next support level, and which is this level.
Yes. Exactly. Exactly.
Can you see?
Okay. Yes.
So the same thing, I will repeat the process again. When price gets to this level, I expect it to break one
Yes.
1 hour market structure like this. Can you see? You get this upper one you are seeing here. Let me change the color. This red color you are seeing here is my 1 hour market structure area. Do you get it? Do you get it?
Yeah, but how do we
The
know from here
previous,
the 1
the previous
hour
low
market?
and the recent high.
How do we do what?
How do we locate the 1 hour
Good.
market structure?
How
From
you locate the 1 hour
daily?
market structure? You come to the 1 hour time frame and locate it. I drew this one here because it has not yet print. We are just assuming. I'm telling you what will happen when it gets to this place.
Okay, okay, it's by assumption.
Yeah. Now, if it comes to this place and it did not break market structure, that means automatically my next target will be here. Are you seeing it?
Yes.
And when it comes to this place, what will happen? It's going to break, it must break that 1 hour market structure for you to be able to go backward, up. Are you seeing it?
Yes, yes.
So as price is like this now let me answer your question, Mr. Femi, again. Let me start afresh.
Okay.
Now, I told you that it is the smaller time frame that build up the higher time frame level. So that is the relation. I want to respect the lower time frame support and resistance level before respecting the higher time frame. You get?
Okay.
Before price will get to the higher time frame, it will pass the lower time frame. So the lower time frame, when you interpret it very well, when you interpret it, it will lead you to the higher time frame.
Okay.
It will lead you to the higher time frame. So in this scenario now, I want to analyze USD index. Now, USD index closed on the monthly time frame like this. It closed from this bottom, right?
Yeah.
Now, I will go to the daily time frame and see if we have a break of daily time frame market structure, of which we have here. There was a break here at the end of the month. Are you seeing it? This is the market structure level. This is where it breaks out from. Are you seeing it now? Are we seeing it? Are we clear? All right, let me share my screen. Sorry. David, please quickly make me a host, please. David, please make me an host to, a host.
It's on mute. Okay, that's fine.
Okay, I'm still waiting. Okay, let me see. Let me just stop from there. Your second question, let me see if it's not practical based. So I will answer it. Can you hear me, Mr. Femi?
Yes.
All right, your second question is, do we just draw on a single time frame, or otherwise, if trading on a daily, do we start on the weekly? If trading on the 1 hour, do we start on the 4 hours? All right, good. Now, this is it. When you are trading, you want to always have it at the back of your mind that the smaller time frame gives rise to the what? Higher time frame. Now,
Okay.
if I'm trading, I want to analyze from the top. It is called a top-down analysis. Analyze from the top to the lower. Why am I analyzing from the higher time frame to the lower time frame? Just for this. I want to know where price is going to, the target. Do you get?
Yeah.
The target is gotten from the higher time frame. So I want to know where the target is. So after knowing the target, I will now come down. I will now come down to the what? To the lower time frame to look for what? Those particular lower time frame levels that can serve as a support or a resistant level that will build up my what? My entry to target the higher time frame level. Do you get it?
Okay.
Now, if you look at Chelsea
Yeah.
now, if you look at Chelsea now, or most football clubs, they love starting their build-up play from the goalkeeper. When I mean build-up play, they will pass to the goalkeeper. Goalkeeper will pass to the defenders. Then from the defenders, they want to build up, pass, tick-tacker until they get to their goal, the opponent's goal post. Do you get it?
Okay.
Good. Now that build up from the goalkeeper is the lower time frame. Why? Because you want to score a goal and you are taking the ball back to your post. You cannot score like that, right?
Okay.
So the best thing is to do what? The best thing is to take the ball to your opponent's post. Now, the target is the opponent post. That is our higher time frame. Are you getting it?
Yeah.
For the build-up, that means where we pass from our post to their post is the lower time frame.
Okay.
So when we are doing analysis, when we go further into analysis, you could be able to see what I'm talking about. You will see that I will go from the higher to the lower. Then from the I will now look for I will look for an entry point in the lower time frame. After I must have known the direction, the face of the market, then I will now go to the lower time frame, take an entry that will align with my higher time frame target.
Okay.
You get now?
Yes. Thank
Good.
you.
Now the next question is this.
No, I think that's all from me.
That's all from you. That's all from you.
Yeah, thank you.
I want to ask something, sir.
Okay, no problem. You can ask.
Sir, please, when you want to, it's true that we trace the market from the monthly, weekly, daily, and 4 hours, then 1 hour.
Okay.
What if in a situation whereby we want to trade maybe short-term trade or maybe a day trade? From after doing all this analysis,
A scalper.
Engineer, help me
can you
ask
hear me?
him. The guy, right? He like quick money. Now scalper, he won't become scalper. In Papa na swing trader, he say he won't be scalper. All right, Chukwuebuka.
So, sir, from which time frame am I, as in someone that is a short-term trader or a scalper, from which time frame will that person, position himself to know what the market is?
Yeah, if I take trade from the 1 minute time frame, my stop loss will be 1 bar. Why am I telling you this? When you understand your system, whatsoever system you are using, in as much that it is working on the higher time frame, it will work on the lower time frame. So if you are looking to trade from the 1 hour or the 1 minute, then that means your main trend will be either daily Your main trend will be 4 hours or 1 hour. Are you getting it?
Yes, sir.
What are you doing there? You want to know the direction of the market. Where is the market going to?
Okay.
When you understand where the market is going to, your next thing is to know the face. What is the face of the market? Side the corner, where is it currently? Before you know where you are going to, you have to know where you are coming from, Abi.
Exactly, sir.
Where you are coming from, is your higher time frame. So that when you rush, you always go back to it and say, okay, what am I? Where am I? You understand? Where you are currently is the market face. You get? Okay,
Yes, sir.
I am in Imo State right now. That is your face. Now, in the market, it is either a retracement or a trend. If it's a retracement phase or consolidation, that means you know that, okay, this is a retracement market. Then you ready yourself for what? Either a breakout or a retest. Anyone that is your entry style. Then you see it, you go down to your lower time frame and you take your entry. In alignment with what? The 4-hour target that you saw. I don't know why David is not coming up. I would have loved him to make me an host. Then I will show you what I'm just saying. I will tell you, I will show it to you from 1 minute, 5 minutes, any time frame. But you must follow the time frame sequence.
Okay. Okay. Okay, sir.
Okay. So any
that
other
means
question?
someone that is a
Someone that is I can hear
does
you
it mean that
continue.
does it mean that someone that is a day trader or a short-term trader we find his main time frame from the 4 hours time frame?
Yeah, you are a day trader, daily, intraday, daily, scalper, 4 hours, 1 hour.
Okay. All right, sir.
Any other question?
Sir,
I can hear you, sir.
yes, I love swing trading.
All right.
I just find it easy to place trade and forget it and go and rest.
That one is better. It's better.
Otherwise, I'll be dealing with.
It's a good one. Swing trading is actually good. But whenever you are trading swing trading, can you hear me? Engineer, can you hear me? Engineer, can you hear me?
Yes, I can hear you now, sir.
Good. Whenever you are trading swing trading, you want to
Yes,
always
sir.
start your trading week on Tuesday.
Yes.
You must start on Tuesday.
Okay, sir. But analyze during the weekend.
Yeah, you analyze during the weekend, but you must take your trade
Okay.
on Tuesday.
Definitely, I will use the weekly.
You will use the weekly to
Weekly and the 4 hours.
use the weekly and the 4 hours and the daily and the monthly to analyze. But you must take your trade you must take your entry trade on Tuesday. On Tuesday, the market will go to your direction.
Okay, sir.
On Monday, the market will do what? The market will go to your place.
Consolidate.
Understand?
Hello.
Hello.
It will do what?
Hello.
You said the market will do work on Monday.
On Monday, the market, if you are looking to sell the market,
Yes, sir.
On Monday, the market will trace to Tuesday to a particular resistance on Monday.
Okay, okay.
then it will sell.
Creating double top.
Creating double top on Monday. Then on Tuesday, London section, it will sell.
Yeah.
Now,
Zubo.
NZDCA chef trade, I took. I know Mr. Femi will like this one. Mr. Femi like real life example. First, the one that is happening. Nah.
Thank you, coach.
All right, let's see on NZDCA chef. I analyzed many pairs, and at the end of the day, I couldn't see any entry. I did cry.
Sorry, sir, is that all I need to know about the swing?
You said?
Is that all I need to know about the
Yeah,
swing
that is all you need to know for now.
for now? Okay.
All right, now look at this. Look at this. Let's see something here. It's trying to load. It's in the try load.
Coach, please, can you make your candles a bit bigger, sir?
I enjoy making it smaller.
I know.
All right.
Some of us are already using glasses.
My service is too slow. All right, this is 4 hours. Now this is daily.
Okay.
This is daily, all right? This is daily. Now, engineer, looking at this particular trade, everybody looking at this particular trade.
Yes.
Price drops, yeah, within 3 days from here to this place, right?
Yes.
And within 1, 2, 3, 4, 5, 6, 7, 8 days, it could not take out the eye for the last 3 days. Are you seeing it?
Yeah.
So, and if you look at it, look at what happened there. It is already where? On my moving average level. Can you see?
Yes.
Now, this is, now let's look at it very well. This is Tuesday. Sorry, this is Wednesday, Tuesday, Monday, right? Let me increase this thing. Monday, Tuesday, Wednesday, right?
Okay.
Now, what happened here? This is a Friday bar, right?
Okay.
Now, on Monday, we'll take this particular place. Let me highlight here. On Monday, what happened? They took price up. On Monday, they took price up. This is where Friday closed. Can you see? I separated it. Then on Monday, look at it. Friday closed like this. When they answer me, yes, are we there? So I will know.
Yes, sir.
Because of the service. All right. Now, Friday closed there.
Okay. Without red.
Friday closed there. Then Monday started this way. Can you see? They are giving us a what? M formation.
Yes.
Can you see the double top?
Yes, sir.
Yeah.
And what happened? They dropped price.
Drop the price.
They drop price. Can you see?
Yeah.
Now, after dropping price, what did they do? They drop price. If you come down here, you will see that this is on Tuesday. This is on Tuesday. Tuesday around 4, 8. Now, that is why if you look at my chart, my entry was around this place, right?
Okay.
This was around 9 o'clock. It was around 9 I took this trade. On Tuesday. Yeah. On not, I did not even look at the EMA. on Tuesday. Are you getting it? Now, quickly, let me touch another point here. Now, see, this is price at the moving average level in 4 hours, right? This is price at the moving average level in 4 hours, right? You will say,
Yeah.
why didn't this place hold as support and resistance? Right? Now, the simple reason why I did not wait is, remember I told you, if price gets to 4-hour level, it must break 30 minutes market structure, right? Now, let's go to 30 minutes here and see clearly if there's a break of market structure. Did you see now that there is no break at all of market structure in 4 hours, in 30 minutes? Can you see there's no break?
It's consolidating.
It consolidated, but it did not break market structure. Can you see?
Yes.
And it drops. So now, Chukwuebuka, let me answer your question.
Mhm.
Now, Chukwuebuka, if I look at this particular trade now, I want to trade from here, let's say from this place now to this place. And I assume and I know that price has broken this place like this.
Yes, sir.
I know that my next area is this place where it consolidated.
The equal low.
The equal low, right? Thank you.
Yes.
Now that means I want to take my entry within these 2 bars, right? Since you are a scalper,
Okay, sir.
your highest pip should be 20 or 15. Now this is 22 pips, right?
Ozuwo.
Now I know that this is a breakout. What will I do? This is 4 hours. I know my target area. What is the next area for target? The primary time frame, 30 minutes. I go to the 30 minutes, Control B. Now look at the 30 minutes. Now this is where I want to, this is the place, Abi. This is the 2-bar region, right? The 2 bars I drew in 4 hours. Can you see?
Yes.
Now I will simply wait for what? A retracement. Since I have a breakout from 30 minutes here, this is about 30 minutes breakout. Did you see?
Yes.
I will now go to the 5 minutes time frame to look for my entry at a key level area, which is, it might be what? Another block or moving average, but I'm very, very sure it's a moving average level. Now let's go and see. Now, can you see it's a moving average level? Can you see the retracement? Did you see it here?
Yes, sir.
Can you see?
Yes.
Now I will take my entry from this area.
Nah, this moving average or another thing. No.
From this area, I will take my entry from this area. Now another area of entry presented itself here. If you look at it, this particular place did not break this market structure that is there, right?
Yes.
And price drops. Now, if I want to enter this trade from 1 minute time frame now, I know some people don't talk, say 1 minute time frame. Let us see. Okay. Now, this is 1 minute time frame. Control B. This is 1 minute time frame. Now look at it. This is 1 minute time frame. If you look at it, it closes above 1 minute moving average, right?
Yes.
But it came back up to touch this other block. Have you seen the other block, Chukwuebuka?
Yes, sir.
Have you seen the other block?
Yes, sir.
Came to the other block region. but I will not take my entry here. I will take my entry immediately it closes below this moving average.
Ah,
Yeah,
so why?
because in as much that price is still below is above the moving average, it is not advisable to buy.
To sell or to buy?
In as much price, sorry, to sell. But if price is below the moving average, you sell. If it is above, you buy. But if it's above and you are selling, you are claiming boss. You know the market more than the market.
Okay.
I am this kind of guy. I love the conservative entry. You understand?
Yes.
Last month, I was able to do 123% returns with 1.83% drawdown. So it is not that I don't want to pick the top. In short, most of my losses last month was because I was trying to form Jagaban and pick a campaign position. You understand?
Yeah.
Okay.
Price went my way, but it took time. But I just decided to close loss because I already recovered the losses with other pairs. You understand?
Okay.
So I love it. Conversation. Oh, what's the English again? Conservative.
Conservative.
Now my stop loss will be here. 1 bar. And then they pass out. You get?
Okay.
Then we sell.
1 bar immediately closes below the moving average.
Don't use that word. Immediately it closes. I don't want you to use that one. Is for baby peeps.
Okay.
I'm not saying immediately it
Swazino,
closes.
grammar.
What I'm saying is price must be below my moving average, not closes below. Closes below Napo. That is what they want you to think. Not that you will not say anytime price closes below, you just go and buy, sell, or you go and it closes above, you run, go buy. You understand?
Okay.
When we get it without the close,
when
the price is below,
when the price is below moving average, it is a good time to sell. But when the price is above moving average, it is a good time to buy. But I did not tell you to go and base your entry based on it closes above the moving average. You get?
Okay.
How people understand what I'm saying?
Exactly, sir.
The way I understand this is that it is not every close.
It is not. Hello. Can you hear me? David, I saw your message. The class is more advanced. Fine. David, you will go back to this class and listen to everything you don't understand and jot it down. Ensure you do that, please. Jot them down. So when we get to that advanced level, if I answer them, you tick it. Do you get it, David?
I believe there is a recorded video for this particular class on support and resistance.
Yeah, there is.
So he can go and watch it and rewatch it. If he wants to ask questions, let him ask now. So we are asking according to our level of understanding.
That is what he's saying. And I really want
So he should
him
not be
to,
upset.
He's not going to upset. It's kind of stretching his learning capacity. That's why I'm telling him. Because you know it's not about video. Yeah, it's not about the video, David. This thing. Just make me an host. The thing is this. Ensure you write out everything you don't understand. Write it down and keep it. Once we get to that level in the advance, you will be able to understand them more clearer. Better than now. So don't say it is for beginners. This class is currently for beginners, fine. But the terms I am using right now, jot them down. I am saying this because when we get to support and resistance, or we even get to the advance, I might not even say it. You know, it is questions that bring out everything that is in my head. If people don't ask the right questions, everything won't come out. Are you getting it?
Yes.
Yes, sir.
So if you ask the questions, anyone you don't understand, just jot them down. Once we get to that particular place and I did not treat it, you ask it, then I will explain it to you very well. David, are we clear now? Are we good? Are we good to go? All right. Now, I have answered, I've treated your questions. Engineer, I have treated your questions. Mr. Femi, I have treated your question. Any other questions, please? Any other questions?
So I want to ask something.
Okay.
You said that that market always respects lower time frame before it gets to the higher time frame.
Okay.
So what if in a situation whereby you want to trade, market started showing bullish candles on a 5 minutes, then started showing the same bullish candle on the 15 minutes, but on the 30 minutes, it's still a red candle, but it's creating a little wick. And on a 4 hours, it's also creating a little wick that is going up, that in order to correct itself to turn to red, actually. But on the 5 minutes, is also it show 1 minute, 5 minutes, 15 minutes, I started showing bullish candles. So what will you advise? Will you advise someone to take such trade in the sense that the 4 hours have not, turned to bullish candle?
All right.
Will you advise someone to take such trade?
Now, this question is the same thing with David. David, you asked this question. You asked this question during the week. When I went down to daily, it was trending up. But when I come down to 4 hours, it was bearish. Right, David? All right, good. Now, your question is similar to what this person, Chukwuebuka, is asking now. Chukwuebuka, you are asking if the 4 hours is bullish and if the 5 minutes bullish, 15 minutes bullish, then 30 minutes bearish. Is it advisable to take trade, right?
Yes.
Good. The smaller time frame will always build up the higher time frame. You get?
Okay, sir.
Now let me go to NZD-CHF. I'm going to answer two of these questions at once. Let's go back to NZD-CHF. Okay, this is NZD-CHF. To today's price. Today.
So the reason why I asked this question is that when I was on volatility 50 index,
Okay.
51st index today, so I was kind of trying to do some little scalping there. So something happened when I saw that the trend was bearish, but I was trying to take a trade on the retracement, on every available retracement that you retrace so fast.
Okay.
So I now noticed that on the 4 hours, the market could not break the support level. So the market started retracing on the 4 hours. So I now went to the 5 minutes. So I now saw that the 5 minutes has created a railway pattern on the candle, So first candle on the 5 minutes created another second candle. So I now checked the 15 minutes. The 15 minutes has turned to green, but the 30 minutes is about to, as is red candle, but is creating now weak, that is going up to turn to a bullish candle. So when I joined the trend, the thing just went like 10 to 15 pips and reversed immediately. I jumped out. So
The thing is this.
the thing is,
The thing is this.
okay.
It still boils down to your market space. You did not know the face of the market. That is why you are confused. You and Mr. David. Are you getting it?
Okay.
Now, if this is, I'm drawing on a whiteboard. If this is the daily time frame, the daily time frame is bearish like this,
Okay.
and this is the 4 hours. 4 hours is doing something like this. You know this thing here now you are seeing is daily. It is going to be a week in the daily time frame.
Yes.
1 hour is now doing something bigger like this.
Okay. Yes.
1 hour is doing something like this. 30 minutes is doing something like this.
Okay.
15 minutes. I know you mean like this.
Okay.
5 minutes is also doing like this.
Okay.
1 minute is doing like this.
Exactly.
All right. Are we all here?
Yes, sir.
David, are you here? $30 minutes. 15 minutes. 5 minutes. 1 minute. David, can you hear me? All right, good. Now, this is daily now. All these things you are seeing here, all these things you are seeing here,
Okay.
all this rectangle you are seeing, all that retracement you are seeing,
Okay.
all these things you are seeing here, they are the weeks of this daily.
Yes.
They are the daily weeks, right?
Yes.
The daily weeks. Now, in the 4 hours, the week, it is small. The rectangle is small because that is the 4 hours.
Okay.
Now, in the 1 hour, it's going to be bigger than the 4 hours because it is what? 1 hour, more bars.
Yes.
Now, the lower the time frame, the number the bars increases.
Yes.
Now, what will happen here is this. Market will start from the 1 minute. When it gets to this 1 minute area, 1 minute will touch resistance.
Okay.
When 1 minute touch resistance at this zone, it will not do all this. It will do all this shabby, whatever. Now it will break 1 minute market structure and fall. Now when it falls, this 5 minutes too will fall, but it will fall smaller. Do you understand?
Okay.
Now, 1 minute market structure has been broken here, right?
Yes.
But 5 minutes has not been broken.
Mm.
Now, it might still want to place more around 5 minutes. Anything that happen to 5 minutes will happen in 1 minute. Do you get?
Yes.
Now, when it break 5 minutes market structure here, are you seeing it?
Mm.
No, sir, I can't see it.
When it break 5 minutes market structure here like this, engineer, can you see the white this thing now?
Okay.
When it break,
Yes, yes, sir.
when it break 5 minutes market structure like this, eh?
Mm.
The next target to be what? 15 minutes.
Yes.
Now 15 minutes will now break 15-minute market structure like this. Eh?
Okay.
The next target to be what? 30 minutes. 30 minutes will break 30 minutes market structure to give us what? 1 hour. Now this 1 hour, you will not see the market structure. It will not break this thing because all these things are lower time frame. When you come to the 1 hour, the burst is small. 1 hour is just 8 bars. So you don't expect to see the market structure. But instead, what you will just see is price might now do what? Have a long bearish bar. Do you understand?
Yes.
Now, the interpretation of all this white bar you are seeing here, all this white marker you are seeing here, that is what happened to this 1 hour that gave us this full 1 hour bar. Do you get it?
Yes.
Now, in the 4 hours, all this thing you are seeing white here, it might be what? Hammer. It might give us hammer instead in the 4 hours. Like this. We might have hammer. Are you seeing it? Do you get?
Yeah.
Then
Yes,
price
sir.
will now drop. Now, when price drop and close below this rectangle, automatically our daily does not have any what? Week again. Do you get?
Yes.
Yes, sir.
You get the point now.
Yes, sir.
Now, let me take a clearer example. Let's take a clearer example.
Yes.
Now, let's take a clearer example from the charts. What did I do? All right. Now, let's take this. Look at this point. This is 1 hour, right? I want us to look at that bullish bar. Are you here with me?
Yes, sir. Yes, sir.
Now look at this bullish bar. You will notice one thing. Now let's start on 1 minute on the bullish bar. Now this is the 1 minute. Are you seeing it?
Yes.
Now what happened there? You can see how the thing is. Sorry, I'm going to make this one smaller. You can see how the thing is very big in 1 minute. Right? Now what happened here? 1 minute retrace. It touched its resistance here. Can you see?
Yes.
Form what we have like a structure here. Form another structure here. Form a resistance here. Come down and break market structure there. Can you see?
Yes, sir.
Now we will highlight this. Now look at this particular place. Let me put my. Look at this particular place. Now this particular place it came down to. Let's go down to the 5 minutes. you will see that it is what? The 5 minutes region. Can you see? It has not break 5 minutes market structure, which is this low. Do you get it?
Yes.
But instead, it went back
Yes.
up. It retraced back up like this. And did what? Finally breaks 5 minutes market structure. Now we have a 5 minutes book close. Yeah. Now what is the next thing? 15 minutes, right? Let's go to the 15 minutes. Now this is the 15 minutes. Did you see that in the 15 minutes it becomes smaller, and at the end of the day we still have a close below the 15 minutes time frame? Did you see? Hello, are we here? Are we here?
Yes, sir. Yes, sir. Person don't sleep off. Oh.
All right. Let me just
Oh,
round the
boy.
class up today at this particular area. We'll continue tomorrow.
Okay.
I would love to do a repetition
sir.
of this class so that those who did not attend will attend. I need people to ask questions because this is support and resistance. It's necessary.
Very important.
All right, thank you.
Thanks, coach.
Thank you, sir.
Good night.
All right, sir.